And now for something completely different.
Forget everything you've been told by others before. Get ready for the real deal, the full story. Real talk about money, markets, life. Now, it's The Real Investment Show with Lance Roberts, presented by RIA Advisors.
And good morning and welcome to the show. Of course, second best day of the week as we get ready to wrap up this week and get headed into the middle of February already. Can't believe we're already this far into it, but this week we'll wrap up the end of about 80% of earnings season. Amazon today reports after the bell. Lots of eyes on Amazon, particularly because of their cloud services. After Microsoft and Google both reported weaker cloud services, all eyes are kind of is going to be on that particular day. It really doesn't matter what Amazon says about anything else right now. It's all going to be about cloud services. So if that revenue comes in weak, Amazon will be down tomorrow. If it comes in strong, Amazon should be up strong tomorrow. So we'll see what happens, but that's going to be the big focus this afternoon. Eli Lilly also reports today. Of course, these are positions that we have ownership in. So this, just for disclosure purposes, we have positions in Eli Lilly, but they report after the bell today as well. Everybody be watching that very carefully. Again, all these Ozempic drugs, weight loss drugs, semaglutides. Those are kind of the game changers in the weight loss industry and diabetes control, except how did Wilford Brimley say it? The diabetes? The diabetes, that was it. Got to have the diabetes control coming from the semaglutide. So that's going to be kind of a big thing to watch this afternoon as well. So again, wrapping up the majority of earnings season next week, and this is why I was saying, this month's already flying by. Next week, we'll really get through the most of this, and by the end of next week, the buyback window will be, for the most part, fully back open again for companies to start buying back shares. So again, we may see some additional support there. Economic data, as of course, is all. We had ADP report yesterday, a little bit stronger than expected. Job openings were a lot weaker than expected this week. ISM Services came in weaker than expected, and that was interesting because in the last report, and we discussed this on the show. In the last report, there was a big jump in the ISM Services Index and prices paid. Everybody's like, oh my gosh, inflation's coming back. Take a look at what happens with ISM prices paid for services. And I said, be careful with that because that's very spiky data. It jumps all the time. Again, these are sentiment surveys. It's just how do you feel about stuff. And things can change very quickly. And not surprisingly, we saw a big reversal in the ISM Services Index and prices paid both dropping. So again, be careful with data, and this is kind of part of the commentary we have in today's daily market commentary on the website. So if you're subscribed to our daily market commentary, you'll get it precisely at 7:30 this morning when it comes out. But we go through kind of what's going on in the markets, etc. So it's a good little quick 3-minute read at most. It's very short. Just get you up to date, kind of market technicals, etc. Get you ready for the trading day. So you can go to our website, realinvestmentadvice.com, subscribe for that. We'll email it to you every morning. But today's commentary, Michael Leibowitz does an analysis of the birth-death adjustment in the employment number. And this is that plug number that the BLS uses to basically create jobs. So, when you start seeing these job reports of 200,000 jobs created last month, 150,000 jobs, a big chunk of those jobs, a lot of times are the birth-death adjustment. And it's just a guess. They really have no idea. In fact, the vast majority of the time, there's always they never have a negative birth-death adjustment. It's never negative. However, the number of small businesses all during the Obama administration actually declined, but we added people to the roll every month because of that. So be careful with that. There's a big negative adjustment coming to that birth-death adjustment that Michael points out this morning. So a lot of the strength in this employment data. At the headline number, again, we're going to see this report on Friday. This is the big employment report Friday. But you take a look at other stuff that's going on. Job openings, big decline there. Continuing claims continue to creep up. These are people that have gotten laid off. They filed their initial claim. They're still on it. They still haven't gotten a job. So the underlying weakness in that employment data is very different than what we're seeing at the headline number. So again, that number comes out on Friday, but we'll be digging through that as well when we get there. Okay, here's what you need to know before the bell this morning. Yesterday had a very good day in the market. Started out just a tad weak. And we talked about yesterday, we were sitting right on the 50 and 20-day moving average. And so that support level needed to hold yesterday. We opened up just a little bit weak yesterday morning following the announcements from AMD and Google. And those were the big kind of losers yesterday in the market. But, kind of expectations were those going to take the whole market down with it. Wasn't the case. Immediately, the markets kind of turned around, started rallying back, came right off that 50-day, 20-day moving average support level, rallied up, and had a nice finish to the day. So, again, that rally, and we talked about this yesterday, that kept the MACD sell signal from triggering. So we're still on a buy signal right now, just barely. But the market's in a bullish trend at the moment. Relative strength is improving. That's giving a lift to the markets at the moment. So again, technically, everything is fine in the markets. And despite the disappointing news that we saw out of Google and AMD and others, there was actually a whole lot of buying going on yesterday within the overall market. Money flows continue to creep up here. And we saw a lot of buying, for instance, in AMD as a good example. AMD's had a long stretch of negative money flows. Those went sharply positive yesterday. So there was a lot of buying in AMD stock yesterday, even though the stock was down. Stock opened down about 9%, almost 10%. Finished today only down about 6%. But there was a lot of buying all day long. Those money flows went positive. So we'll see if we get some carry through in the semiconductor space over the next few days as we kind of see that. But again, in the overall market, everything continues to be doing just fine. And some of this latest data that we've seen coming out has certainly been helping the bond market as well. 10-year Treasury yields dropped pretty sharply. We broke through the 20 and the 50-day moving average yesterday. Fairly big move on that trade deficit number we saw yesterday, as well as the ISM Services number, all suggesting the economy is a lot weaker than suggested. That's bringing down yields across front. We're still on a pretty decent sell signal on yields, suggesting that yields can go lower. We are a little bit oversold on yields temporarily, so a bit of a bounce. As long as we stay within this downtrend, wouldn't be surprising, but see yields come up to maybe 4.4, 4.5, work off some of this kind of oversold condition that we've got, or overbought condition because interest rates are inverted, but kind of work that backwards and work some of that off, and then that would allow yields to continue to come on down as the economic data continues to weaken. And at least that seems to be the trend at the moment, that we're going to see some slower kind of bouts of economic data, and that should bring yields down here over the course of the next couple of weeks. Lots of support around 4.2%, 4.3%. So again, that's going to be the next big initial test for yields, is around that 4.3% level. If we break below that, you're going to very quickly get down into 3.94. So, but again, if we're getting down into that level, we're going to be seeing much weaker economic data at that point. So we're not there just yet, but we are starting to correct some of that term premium that we had discussed here on the show, that kind of plug number between where rates are and where they should be based on the fundamentals. So we are kind of working through that process. We talked a little bit yesterday about the dollar as well. The dollar has kind of really been volatile as of late. Lots of movement, kind of up and down, back and forth over trade announcements, tariffs, all those type of things, and that's been really creating a lot of fluctuations in the dollar. But the dollar is holding right onto the 50-day moving average right now on a sell signal, so it is trying to weaken here a bit. That would be that would help reduce or basically reduce monetary tightness within the system. A little bit weaker dollar here, and the dollar is really kind of in between being oversold and overbought. So again, kind of flirting with support here, but we may see that dollar weaken up here a bit over the course of the next couple of weeks. So we'll keep a watch on that. That should help buoy stocks if that occurs, and we do see a little bit of a weaker dollar here. That's what you need to know before the bell this morning. We come back, we'll pick up with Michael Leibowitz, and we're going to talk about what is money, right? There's a lot of confusion about money, what it is, where it comes from, how does it get into the economy. We're going to talk all about that today, and subsequently there's also an article about it on the website, realinvestmentadvice.com.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
If you thought retirement income was just stocks and bonds, let us help you understand how to rethink your approach. Our first Candid Coffee of 2025 has everything you wanted to know about income in retirement. Saturday, February 8th with Richard Rosso and Danny Ratliff. What else is there besides stocks and bonds? Is your retirement paycheck really diversified? Everything you wanted to know about income in retirement. Candid Coffee with Ratliff and Rosso. Register today at realinvestmentadvice.com. realinvestmentadvice.com.
RIA Advisors Research is the envy of the industry. Our economic insights are featured on advisorperspectives.com, Fox Business, and MarketWatch. RIA provides advisors with marketing and back office support, objective research, and holistic, cutting-edge financial planning tools to meet your clients' needs. Want to join a winning team and be part of a fiduciary culture where you can do your best work? Then why haven't you contacted us yet? Go to our confidential advisor hub at realinvestmentadvice.com. RIA Advisors. Big enough where it matters, agile enough when it counts.
The Real Investment Show.
When it comes to wealth management, most people think of stocks and bonds, but it's like enjoying one layer in a 7-layer cake. At RIA Advisors, we want to make sure you get your cake and eat it too. Social Security, Medicare, creating a tax-friendly retirement paycheck. Perhaps you're saving for college. How about life insurance, guaranteed income solutions, all along with comprehensive planning? At RIA, a holistic approach to your money is our priority. Call us today, 855-RIA-PLAN, or find us online at realinvestmentadvice.com. realinvestmentadvice.com.
And now, another page from the Real Investment Advisors Investing Manifesto. A passive investment portfolio requires active risk management. It's not a choice, it's necessity. Diversification doesn't protect against risk of loss. Let us actively help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
You're listening to The Real Investment Show.
So welcome back to the show this morning. Look, there's lots of confusion that runs around a lot about, printing money. What is money? We try to assign things as money that's not really money. And it's okay. But a lot of this comes from things you read in the media. People that are promoting, certain things, they're trying to sell you a product. They're trying to sell you gold. So they tell you that gold is a currency and it's not. But you need to have a good, firm understanding of the plumbing that works in the economy if you're going to invest in markets and understand a lot of these things, because a lot of the narratives that are put out there about the government and printing money and all this stuff, it's great scare tactics, right? It's just great scary headlines, and it's like, oh my gosh, this is just terrible. We're all going to die, and we're going to all, the economy's bankrupt, et cetera. And there's certainly reasons for concern. Yes, we have a lot of debt. I mean, there's no doubt about that. But debt has to be a form of understanding between what's it relative to. Right? Just saying you have a lot of debt doesn't really mean a whole lot. If I said, look, I've got $6 million in debt, that sounds like a lot of debt. But if I tell you that I'm worth $3 billion, $6 billion is, $6 million in debt's not that much money, right? I mean, so you have to, all these headlines and these narratives and everything and by the way, those two numbers I just gave, that's not me. I don't have $6 million in debt. I just want to, and I'm not worth $3 billion. So just want to clear that. I don't want any, assumptions being put out there. But, we have to have these understandings and these clarities about things so that we can have a better understanding of what we're dealing with in markets and the economy when we're investing our capital. And so, Mike, you wrote a great article on this yesterday, and it's going to generate a ton of questions and a ton of debate, and it's going to have people kind of pulling their hair out and a lot of things, because this goes so against what is pitched in the mainstream media. But let's just start with the basics of it, and then I'll kind of ask you some questions about things that people ask me, and we'll just go from there.
Sounds good, Lance. And one of the reasons I wrote this article, we've been talking a lot about inflation, where we think inflation's going, and one of the components of inflation is the money supply. Right? The more money out there, the more people have to spend, so that increases the demand side of the supply-demand equation for goods. So obviously, understanding the money supply is a big deal. And if you were to go to a cocktail party tonight and talk to a couple friends and say, hey, do you know where money comes from? I guarantee you almost all of them would give you the wrong answer or say no. And the answer is a lot of bit disturbing. Money comes not from the government, not from the Fed, but from the banks. So that little regional small bank around the corner can print money. JP Morgan, the Bank of America, the big money center, large global banks print money. That's where money comes from. That's how money is created. And it's what we have in the U.S. and most other countries, for that matter, is what's called a reserve system, a fractional reserve system. So if we start on day one and Lance goes to the bank and he deposits his $1,000, Lance knows he has 1,000 and there's 1,000 in the bank. So everything's square. Well, I then come in and say, hey, I need to borrow money. How much can you lend me? And the bank will say, well, we have 1,000, but we'll lend you 900 because we want to hold a little bit in case Lance needs a little bit of money. So I say, great. I take the $900. I go around the corner to the jeweler. I buy my wife, not myself, nice earrings for $900, and I give the $900 to the jeweler. The jeweler then walks over to the bank, deposits his $900. So right now, Lance thinks he has $1,000. The jeweler thinks he has $900, and they do. And in that instance, $900 was created out of thin air. The money supply almost doubled. So when you work this reserve system all the way through, you can turn about $1,000 into about $9,000, assuming that they hold 10% of reserves. So what determines how much money is created? How much money do the banks want to lend? How much money do people want to borrow? Those are the two of the big components. There's other components. The Federal Reserve can put restraints on the amount of reserves, on the amount of capital, basically through regulatory actions. And the government can indirectly print money too by borrowing money, right? Just like I borrowed the 900, when the government goes to issue a bond, they're borrowing money. So they can increase the money supply indirectly, but ultimately it's the banks that print money that decide how much money will be in our system. And that's why things like financial conditions and lending standards are so critical to understand, because if banks aren't lending, new money's not being created, or it's being created less so.
Yeah. So let me stop you there real quick, because it's a bit confusing, right? Because we're talking about fractional reserve systems and banks lending money, and there's three kind of players in this group, and so the first thing that people, kind of think about is they think about, the Treasury, and the Treasury's over there just printing dollar bills on a press and then sending them out into the world. And yes, we do have printed currency. And yes, the Treasury does print currency in that form because, for instance, in my wallet right now, I've got some $20 bills, right? So this is printed currency. And this comes from the Treasury. And it tells you right on the front that it comes from the Treasury and is signed by the Treasury Secretary. And so there is an amount of currency that's put into the system because there's a demand for printed currency within the system. However, where did this originate from? This didn't just originate off a printing press. In order to get this, the government issued debt. And this is what Mike is is explaining, is that all money is lent into existence. We're not just printing $20 bills out of thin air. There's a debt sitting behind that. And so the government issues the debt. And when we need to print more currency, and again, as the economy grows, yes, we're going to print more currency to meet the currency demands in the system. So if I have a business that requires cash, as an example, so let's say that I run a vending machine system, right? I've got vending machines all over the country, and I need to, have, coins or currency in that system so it can make change for other people, or, ATM systems, whatever. There's a need for some currency. So as the economy grows and the demand for printed currency increases, the Treasury will print currency, but behind that is a debt. Now, what happened to that debt? Well, the Treasury doesn't just print debt. They have to sell their debt to somebody. And this goes directly to what Mike was saying a second ago. Who buys the debt? The banks. The banks buy the debt. There's 20 primary dealers around the world that buy the debt from the Treasury. So in order to be a primary dealer, let's just say that Mike is Scott Bessent for the moment. And Scott says, well, we've got $3 trillion worth of debt coming due this year that we've got to refinance. So they issue some short-term bills. They put them up in the market. Those 20 primary dealers have to buy the debt. There's not an option. If you want to be a primary dealer, you have to guarantee the government you will buy the debt when it comes to auction. So there's always a buyer there. Now, the price is adjusted a bit because of what's going on in the economy, et cetera, and that's why we see, auction rates go up and down, but all the bonds always get sold at auction. Then what happens to the debt from there? Well, once the bank has it, that's collateral on their asset books, which now feeds into their reserves of how much money they can lend. By lending money into the economy, they create more money. So just trying to put a little dovetail around this, Mike, is that it's important to understand that money is not printed. It's all lent into existence.
And in that, I think it's worth going into QE and QT real quick, because everyone thinks QE is printing money, although no one says that QT is destroying money. But what QE does is buy bonds from banks, but they pay for it in reserves. So they're not paying in cash.
Yeah, real quick. This is so important. It's a digital transaction. There is no currency actually moving between the banks and no assets moving between the banks. It is literally an asset swap. The bank basically credits the reserves, digital ones and zeros, and the bond gets sent to the Federal Reserve and they hold it. And that's it.
Right. And the banks have more reserves. These are the same reserves like in Lance's example, where he deposited 1,000, they had 900 in reserves. So let's just say there was a little QE. So now instead of 900, they have 1,000 in reserves. They can lend out more money. So what the Fed's trying to do is push or incentivize banks to lend money. They're making it easier to lend money. They're giving them more reserves so that they can lend more money. What I would say is they're incentivizing money creation, but they are not creating money.
Right. And again, while everybody wants to rail about the Fed printing money when they're doing QE, nobody wants to talk about the fact they're doing the opposite right now, which is extracting money from the system through QT. It is kind of an interesting paradigm when you think about people pushing a narrative All right, be right back after the break. We got more to get into on this. I know it's confusing. We're going to try to sort it out. We've got to get into some of the plumbing of this right after the break. Don't go away.
The Real Investment Advice blog. It's required reading for the informed investor. Catch it today at realinvestmentadvice.com.
If you thought retirement income was just stocks and bonds, let us help you understand how to rethink your approach. Our first Candid Coffee of 2025 has everything you wanted to know about income in retirement. Saturday, February 8th with Richard Rosso and Danny Ratliff. What else is there besides stocks and bonds? Is your retirement paycheck really diversified? Everything you wanted to know about income in retirement. Candid Coffee with Ratliff and Rosso. Register today at realinvestmentadvice.com. Realinvestmentadvice.com.
If you're working and looking to retire soon, a Medicare special enrollment period is in your future. Understanding Medicare choices, enrollment deadlines, and costs are essential to your overall standard of living in retirement. The wrong choices can cost you thousands in penalties. Make sense of Medicare's alphabet soup with RIA Advisors online resources and one-on-one partners to help secure the healthcare insurance choice that is right for your lifestyle and budget and avoid gaps in coverage. Click on the insurance tab at realinvestmentadvice.com today. realinvestmentadvice.com.
The Real Investment Show.
Are you a financial advisor sneaking peeks at our stuff? Instead of trying to do it all yourself, why not just join the team at RIA Advisors? Our full-service organization can provide you with the support, unparalleled research, and tools for managing your clients' money and honoring the fiduciary pledge of putting clients' best interest first. Don't take our word for it. Talk to the advisors that work with us. Want to come win with us? Go to our confidential advisor hub at realinvestmentadvice.com. RIA Advisors, big enough where it matters, agile enough when it counts.
Can't catch the whole show now? Listen to our podcast later at realinvestmentadvice.com.
One thing that the consumer confidence measures, is that correct? If I say consumer confidence measures?
Squared.
How many measures can the consumer confidence measure? I don't know.
The Real Investment Show podcast.
Dr. Seuss.
The consumer confidence measures investor sentiment about stocks. That's the highest level on record.
Same show, your schedule.
It's amazing. Consumers are super confident about the stock market.
At realinvestmentadvice.com.
At the same time, they go, my life sucks economically, but the stock market, it's all good.
And now, another page from the Real Investment Advisors Investing Manifesto. Bulls win in bull markets. Bears win in bear markets. Eagles soar above and take advantage of opportunity. Let us help you soar as you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
Hi, Lance Roberts here. If you're like most people, your 401k plan represents the bulk of your retirement assets. And unfortunately for many, managing your 401k plan can be difficult. There's so many choices, so many things to consider. With just a quick email, a couple of questions, you can put RIA Advisors to work for you managing your 401k plan. Just simply click Ask a Question at realinvestmentadvice.com or give us a call at 855-RIA-PLAN. That's realinvestmentadvice.com.
The Real Investment Show YouTube channel has all our videos ready for your easy access. Now with the new and improved Before the Bell reports and the latest analysis from Lance Roberts and Michael Leibowitz. Subscribe and bookmark our YouTube channel at realinvestmentadvice.com.
You're listening to The Real Investment Show.
Welcome back to the show. Look, the whole concept of money and where it comes from, it's very broad, it's very confusing. And the problem is that there's so many narratives out there pushing agendas, etc., scare tactics, whatever it is, that it obfuscates the very basics of how money operates within a country. Look, and one of those issues comes down to the U.S. dollar is a fiat currency, right? And so people go, oh, it's fiat. There's nothing behind it. Slow your roll, because that's not true. What a fiat currency is, it just means it's not backed specifically by an asset. So back in the day, back in the 1900s, early 1900s, you could walk into the bank with a $1 bill, and you could exchange that $1 bill for $1 worth of gold. or you could take your gold in and you could exchange it for a paper note, because paper notes were much easier to carry around than 6 pounds of gold in your pocket, right? So that was an even exchange. Well, as the economy grows, and as we grew as an economy and the economy became more industrious, that was no longer a viable system to maintain. And so we slowly worked off that system over time. And particularly as the U.S. became the predominant reserve currency of the world, there's simply not enough gold anymore to back up the depth of the transactions that occur on a daily basis in the U.S. dollar. And this is where a lot of people go, we need to go back to a gold standard. It sounds great in theory, but if you want to talk about inflation, put us back on a gold standard, because that immediately limits the amount of money that can be out in the system at any one time, because it's backed by an asset. So you'd have to pick a different asset. It could be crude oil, it could be something else maybe. And I'm certainly not arguing the fact that having a backed currency of some sort would not be better, but it's not really functional in an economy, and in a global economy in particular, and one the size of which occurs in daily transactions in the U.S. dollar. Now, the fault, though, is that when people talk about fiat currencies, they go, well, it's not backed by anything. Well, it's backed by the full faith and credit of the government. The government says, if you have that dollar, I will make good on it. And I can make good on that in several ways. I can make good on it right now just because I have tax revenue coming in, so I can convert that dollar into whatever you want it to be. I also can issue debt at any time to make good on that currency, because I have 20 primary dealers that will buy that debt from me and provide the capital I need. Push comes to shove, at the end of the day, there's about $250 trillion worth of assets sitting behind that dollar also. Oil reserves, land of all types, real estate, all kinds of assets, minerals, etc., mineral rights, all owned by the government. Trillions of dollars of assets sitting behind that currency. So when you talk about fiat, it's not that it's backed by nothing. The government has the ability to make good on that. And it's the same thing as saying that a stock, a piece of equity, right? I own Apple shares. Those are fiat, right? There's nothing behind that except just other buyers. No, I actually own a share of the earnings stream of that company, right? I own something. What do you own in Bitcoin? What's behind Bitcoin, as a good example? Right? So when you're talking about fiat, you have to look behind what's there to determine the value of it. And this is look, we assign a value to gold, right? We have, there's a demand for gold. We use it as a reserve for governments. Governments all over the world have gold reserves sitting there to back their reserve currency. They buy they buy that gold in dollars to get access to U.S. dollars, because gold trades in dollars all over the world. So I use that as a reserve. But at the end of the day, it's just a rock. And if tomorrow we said, we're not going to use gold anymore, we're going to use bottle caps, right? All of a sudden, gold has no value. Bottle caps do. So you have to understand at the end of the day about how we assign value and what's behind that value that we assign to it. We assign value to the U.S. currency because of the strength and stability of the U.S. economy and its rule of law. Okay, Mike, I'm going to stop right there real quick and let you jump in.
So you did say one thing earlier that I think is worth expanding on, and it's the growth of money. And for a growing economy, the amount of money out there has to grow with the economy. And if it doesn't, you have either inflation or deflation just because of the money. Forget the supply and demand of goods. So let's go back to why there's some merit in a gold-backed dollar, but the flaws of it as well. The merit is that there's something backing it that's tangible versus land and defense and all the other benefits that are backing the dollar. When it's backed by gold, there's something that someone could trade for and get the gold if they ascribe value to gold. The problem with backing the dollar by gold is that there's a limited amount of gold in the world. So the amount of new money that can be created is necessarily regulated by the amount of gold in the world. So if the amount of gold in the world, let's just say, stopped growing, the amount of money would stop growing. And this is kind of the theory behind Bitcoin. There's a limited number of Bitcoin, hence, because there's only so much, the value goes up. Well, what happens if all of a sudden we can't find any more gold and the value of the dollar keeps appreciating? And forget against other currencies, it's appreciating against goods and services. What you end up with is deflation, right? So you have an economy and you can't print more money, but there's more demand for money. You're going to end up with an appreciating dollar, which creates deflation, which then disincentivizes investment. Why would I buy a house today when I can buy it tomorrow for 10% off? Why would I build a factory today? I'll wait till tomorrow when it'll be cheaper to build. So it basically destroys the economy because it disincentivizes investment and capital expenditures. And on the flip side, if all of a sudden we discover that the moon is full of gold and we can increase the supply of gold by 20-fold every year, the dollar is going to be worthless. You're going to have rampant inflation because there's so much money out there. This is what happened in Germany in the 1930s. In that case, they just printed money, and there's just too much money chasing too few goods. So that's why it's important to realize that, I certainly understand the idea of why you would want to back a currency with something tangible, but a fiat currency for any kind of mid-sized to large to, certainly the U.S., but even much smaller countries is the only thing that really makes sense. Now the greatest flaw is managing that supply of money. And that's where this whole conversation gets weird, because it's not elected officials that are managing the supply of money. It's not unelected officials in the Federal Reserve that really manage the supply of money. It's any schmo like Lance or I that can create a bank, can all of a sudden be in the money printing business. So, it's important to understand why we have a fiat currency, the benefits, the potential pitfalls, and you then appreciate why the growth of the money is so important and why that has to be about in line with the potential growth rate of the economy. And again, when it differs is when you start to generate some inflation or deflation.
Which is exactly what happened in 2020. We had a massive surge in money supply because of all the debt that we issued. We were issuing trillions in debt to fund checks to households and everything else you can imagine.
Stop right there, Lance.
Yep.
So what happened in 2020 was the government borrowed money into existence.
That's correct.
The banks lent them the money.
That's correct.
So again, they didn't print money. They borrowed it into existence. Just like if I go to the bank today and I say, I want to borrow $5 trillion, and they say, fine, here it is. I just created I indirectly created $5 trillion. Right.
And that's what happened. And there's a big spike in M2 because we borrowed that into existence, gave it to households to spend, shut down the economy. And when you did that, of course, you get inflation, because at the end of the day, that comes back to supply and demand. You created a supply-demand imbalance, and that's where the inflation comes from. And so, this is part of one of those other misnomers that are out there that, the government creates inflation, and that's not true. It's the actions within the economy that create inflation. Look, and again, you brought up Weimar, which is a common topic. Hyperinflation only occurs when a country is losing a war, and when there's no confidence in that country and that currency. Nobody wants the currency because you've just lost a war. You are a failed state. And those are the environments where their currency, for whatever reason, is what happened to Weimar Republic, is that basically they just lost World War I. The survivability of the state was highly in question. Nobody wanted those assets. Nobody wanted that currency. And so it had no value. And when it had no value, that's your inflation. And again, it was collapsing so quickly, people were getting paid. They would run and give their paycheck to their wife to go buy bread, because within a few minutes, they might not be able to buy bread because the currency was collapsing so quickly, because nobody wanted it. Nobody was willing to exchange goods or services for it in that environment. And this is a key point that we need to come back to when we talk about money and what is money? Right? What is money? Money is something, it is the tender, it is the currency, it is the medium that is accepted for exchange of goods and services. This is why you can't print currency in your basement, right? Because that would be counterfeiting and you go to prison for that. Because there's controls over how much money is in the system and how money is created, and you can't just go create your own money. But the money is determined, the currency exchange is determined by the country. And so I can't, and this is why people will say, well, gold is money. Gold is not money, because I can't exchange it for goods or services directly. I have to convert it into dollars first to exchange it. So I have to convert it to money to exchange it. So I can use gold as a way to grow my savings and to make sure my if gold is going up in value, I can invest my savings into gold. It increases in value, protects my purchasing power parity in the future of those savings, because inflation is always going to go up over time. But when I want to convert that into a spendable asset, I have to convert that back into money. And money is only one form. Money, currency, it's the same word. All right, be right back after the break. Finish up with Michael Leibowitz. Don't go away.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
If you thought retirement income was just stocks and bonds, let us help you understand how to rethink your approach. Our first Candid Coffee of 2025 has everything you wanted to know about income in retirement. Saturday, February 8th, with Richard Rosso and Danny Ratliff. What else is there besides stocks and bonds? Is your retirement paycheck really diversified? Everything you wanted to know about income in retirement. Candid Coffee with Ratliff and Rosso. Register today at realinvestmentadvice.com. Realinvestmentadvice.com.
Will you be turning 65 in 2025? Happy birthday! But there's a Medicare special enrollment period in your future. Understanding Medicare choices, enrollment deadlines, and costs are essential to your overall standard of living in retirement. The wrong choices can cost you thousands in penalties. Make sense of Medicare's alphabet soup with RIA Advisors online resources and one-on-one partners to help secure the healthcare insurance choice that is right for your lifestyle and budget and avoid those gaps in coverage. Click on the insurance tab at realinvestmentadvice.com today. Realinvestmentadvice.com.
The Real Investment Show.
RIA Advisors Research is the envy of the industry. Our economic insights are featured on advisorperspectives.com, Fox Business, and MarketWatch. RIA provides advisors with marketing and back office support, objective research, and holistic cutting-edge financial planning tools to meet your clients' needs. Want to join a winning team and be part of a fiduciary culture where you can do your best work? Then why haven't you contacted us yet? Go to our confidential advisor hub at realinvestmentadvice.com. RIA Advisors. Big enough where it matters, agile enough when it counts.
And now, another page from the Real Investment Advisors Investing Manifesto. Manage risk and volatility rather than trying to manage gains. You don't have to be right all the time. Long-term investing success is a 70% gain. Let us help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
You're listening to The Real Investment Show.
And welcome back to the show. All right, just getting ready to kind of wrap stuff up here. Look, again, there's, we're not trying to win an argument here with anybody. We're just trying to, kind of lay out some fundamentals about how money works, because there's so many misstatements and headlines, and generally where these misstatements come from are people that are generally selling a product. So just trying to get you to understand the very basics, kind of the plumbing of how money works. And again, what you choose to believe is solely up to you. I don't really care. Everybody has their own opinions, but there are some basic fundamental factors that drive how money operates within a system, and that's just the way it is. And there's a lot of debate about whether that's good or not, and debate is always a function of any economy, and we can all have different opinions about what would be better. I mean, would it be better to have no deficit at all? Well, there's a group of people who say, yeah, it'd be great. If the government had no deficit at all, that would be fantastic, right? We'd be a very healthy country economically with no deficit. Problem is, a big chunk of your economic growth over the last 40 years has come from deficit spending. So if you actually look at GDP, X the deficit, we would have negative GDP growth. The value of your economy would be much less than it is today if we had no deficit. So again, you have to kind of understand that not in all cases is debt or deficits bad. Debts and deficits actually provide a benefit if used correctly. And this is where we talk about spending money on productive investments versus non-productive investments, et cetera. And this is one thing that Doji is kind of going through right now, and government is wiping out all this waste and fraud that's going on with spending of taxpayer dollars. That's going to help start to shift dollars to more productive assets if you're not wasting those dollars on fraud and sending it to other countries, et cetera. So again, those are things that economically will benefit down the road. But again, it's just, this is just, how money's created. What is money? These are the questions that Mike and I constantly get brought up, and most of them have a very flawed premise in the understanding of what money is and how it comes and how it gets into it and how money gets into existence. So this is all, we're just trying to cover those basic factors. And again, whatever you take away from this is great. If you don't agree with us, that's your choice. But these all will impact ultimately how markets work going forward. So anyway, Mike, having that said,
can I
go ahead?
Can I just add one quick thing to that?
Sure.
Sorry. So how do I think about money? I think anything is money. If I go to Lance and I have shells or copper or gold, and I say, hey, Lance, here's a couple bricks of gold and a few shells. Can I buy your car? And he says, yes, I have effectively used those commodities as money.
Right, because I accepted it as a medium of exchange. That's correct.
Right. And that's nice of Lance. But in the world that we live in, what matters incredibly most is what's the most generally accepted money. And far and away, that's the dollar. That's the US dollar. Good luck going to 7-Eleven with some of your copper gutter or gold or silver or Bitcoin or going just about anywhere. So whether we like it or not, what money is or what we think it should be, our stock prices, bond prices, asset prices, real estate prices, our wages, everything in the economy is built around the dollar. So we need to accept that money is lent into existence, how it's created, and how it gets distributed throughout the economy. It is what it is. And our money is effectively the dollar, even though it could be anything in theory.
Right. And again, and this comes back to a really key point about investing. And, the goal of investing, and again, this is, and again, it doesn't matter what you invest in, right? And you can invest in gold, you can invest in Bitcoin, you can invest in stocks, you can invest in real estate. Great graphic out this morning showing, why there's such a wealth gap in the economy. And the reason is that people with wealth, i.e. if you're listening to the show at 6:45 in the morning, you probably have money invested in the markets, and that's why you're listening to a financial talk show. And financial talk shows are not big winners in terms of the rating views because most people don't have money, so they don't care. But the big difference between high net worth income earners and middle and lower class income earners is that high income earners invest in assets. They invest in equities, they invest in gold, they invest in Bitcoin, they invest in those type of things. The bottom, really 80%, almost 90% of their wealth is invested in their primary real estate, in their primary house, right? Their primary residence, the one they live in. That's the biggest asset they have on their books because that's what they bought. And all their money goes into that and they spend everything else just trying to sustain their standard of living. So that's why the wealth gap expands. And what's important is that no matter what you invest in, the goal of that is to take our savings today, the value of our dollar today, invest that into gold, invest that into stocks, invest that into bonds, invest that in whatever we want to invest in, and that we will grow that value of our savings over time so that it will adjust for the rate of inflation over time. And so that as I said earlier, you'll have the same purchasing power parity in the future. So in other words, your dollar today will have the same value in the future. That's why we invest. And where we get confused is we start talking about, well, I own gold because the dollar is fiat. That's not why you own gold. The reason you own gold or the reason you own stocks, and it doesn't matter what you use to get there, is to make sure that your purchasing power parity is the same. Because at some point, in order to spend that money, I've got to convert it back into, or let me back that up. In order to spend those savings, I have to convert it into money to spend it. And I want to make sure when I make that conversion, that value is still relative. Mike?
No, that's a great point. That, when I paid you with copper and whatever, someone said Cabbage Patch dolls and silver and gold, you still have to go and take and sell all those things to go buy something you want to buy. So, and someone else said legal tender. Yes, legal tender is what we call it. It's money. And that's what's generally accepted is legal tender. Anything else can be money, but at the end of the day, if you really want to get along in this economy or this society, you need to use dollars.
Right. And again, I mean, look, there's comments, for instance, in the chat right now, the Fed's mandate is to destroy the value of your currency. Now, that's not their mandate, right? And I don't know why you would say something like that, because that makes no sense whatsoever. But these are some of those headlines that get put out there again, and this is what drives people to make bad investing decisions with their capital, because these kind of faulty headlines that are driven to sell a product or to and it's always interesting, right? The people that are generally making these kind of comments in the media are the ones generally, almost every time you go look at them, what's their primary sales product that they're trying to sell you? They're trying to sell you gold. So if gold is what we're all supposed to be in because of this fiat currency, why am I trying to sell it to you? Why am I trying to take my gold and sell you my gold and convert it into the currency, the very thing that supposedly we don't want to have, right? Because that's how they're making money, right? So you're buying an asset, they're making money off of you. And that's okay. There's nothing, that's the system. But understand that the important thing here that we're trying to get to is, and whether it's stocks or whether it's bonds or whether it's Bitcoin or whatever else, people that are coming into, the cryptocurrency market, they're selling you Fartcoin or the Haktua coin or whatever it is. Why are they doing that, right? They're making money off of it, right? They're converting your assets into their assets. And so this is just the medium of exchange that goes on. So always understand the narrative, understand what's really going on, and then always ask yourself, why am I so lucky to be buying this? Why are you selling? If this asset is so valuable, why are you selling it to me? And you can make your own decisions from there. But just the whole point of this conversation today is just be careful of these headlines. We're getting so many of them that are out there right now to scare people into doing things that aren't necessarily good for their money. It's just important to understand, motives and narratives and those type of things so you can make a better informed decision for yourself. And whatever decision you make for yourself is completely fine. That's your decision. Just do it from an informed basis. Mike, I'll let you wrap it up.
Yeah, a commodity-based currency doesn't work because the growth of that commodity can differ from the economic growth rate. And then so you're left with two choices. Do you want more of a democracy where people, where bankers, where citizens decide how much money is created, or do you want the government telling us how much money is created? We've seen that end very badly throughout history. So it may not be the best system, but it is, at least it's democratic. It adjusts with the economy. So with that, I'll keep spending my dollars and buying stocks with our U.S. dollars.
There you go. Well, and again, the whole point is we've got to grow our savings and do well with that. And again, however we do it is fantastic. But look, Mike wrote a whole article on this. So if you go to the website, realinvestmentadvice.com, yesterday's article is talking about what is money. He goes through all the charts, kind of the explanation as well. So if you need to review kind of what we talked about today, it's certainly there for you. And look, this isn't going to stop the headlines. This isn't going to, we're not trying to solve a debate. We're not trying to solve an argument. That's not, the whole point of this. The whole point is just simply to understand how money is created, how money comes into existence. There's not some guy sitting behind a closet somewhere with a money crank, just cranking out printed currency and throwing it out windows. That's just not the way it works. So understanding how we get to, money is brought into existence, and then what happens with money after that is important to understanding how to invest your dollars in the future, and understanding. And again, the biggest thing is understand motives. Those are the biggest things. So when you read headlines, what's the motive? All right, that wraps up for the day. Be back tomorrow. Danny Ratliff, Richard Russo. I'm flying out to Vancouver for the Money Talks conference. I'm doing the keynote speech there, so there'll be no newsletter this weekend. We will be back next week with all of our blogs, newsletters. Everything will return next week. Have a great weekend. We'll see you on Monday.